Hello guys, welcome to the Indian Value Investor. I am Suraj Subramanian, your investment guru. Welcome to another video. In my last video, I had promised that I'd be soon releasing a video as to how you can analyze the fundamentals of a company. So here it is. So today's video is about the easiest ways to find out winning shares like a professional. I don't really need to give you a lecture and teach anything about it to you because this is something that you already know. I know you are surprised, but let me prove it to you that you already have enough skill sets and knowledge to pick up winning shares. Let's get into a quick example. Here is Shiv. He is looking for generating some passive income by being a silent partner in some good business. And here is Shankar. Shankar owns a small business and he has been looking for an investor so that he'll be able to expand his business. That's when Shankar meets Shiv and offers a business stake in his business. Shiv starts contemplating whether it's really a good idea to invest in Shankar's business. Shiv, on his way back home by bus, sees you watching this video. He asks you, "Hey, can you help me in deciding as to whether or not to invest in Shankar's business?" Now, I request you to pause this video and think over the suggestions or questions that you would be probably asking Shiv before he'll be able to decide as to whether or not to invest in Shankar's business. So please pause the video, think over the suggestions that you would be probably giving him and resume with this video. I asked the same questions to my brother. Having absolutely no experience in business or shares, my brother gave me a bunch of suggestions which I think is very much worthwhile. If you had come up with questions that is not covered in these questions, do let me know by mentioning it in the comment section below. Friends, business size and models will be different for different companies. But these are the basic questions that you should be asking before investing in any company. Now, please let me rephrase these questions one by one so that it would be more relevant to the companies that are listed in the stock market today. When you are thinking of investing in the shares of a company, it is really important to understand what business they are into. Are they into automobile manufacturing, pharmaceuticals, IT, airline, construction, or which one? The second question that you have to ask is, for the last how many years they have been in this business? It's always a good practice to check out the history of the company. The third question that you should be asking definitely is, who are the promoters of the company? For example, the moment you hear the name Tata, you start associating it with trust. By the way, do not take this as a recommendation of stocks of Tata. This is only for educational purposes. It's really important to understand who are the promoters of the company. Please do note that you will get all the required information of the company that you are looking for in its annual report. Further, this video is just an introduction to the fundamental analysis of a company at a pretty basic level. I'd be making more videos that are much more elaborate on fundamental analysis and reading annual reports very shortly. The next big question that you should be asking is, what is the sales of the company? You want your company's sales to increase year after year. Now, it's not just the sales that you are bothered about, you're also bothered about the expenditures of the company. As a shareholder, you want the expenditures of your company to be minimal so that you'll be able to maximize profits. Talking about profits, ultimately, what profits the business is making is a cardinal question that every investor should be asking. We are all in the stock market for making money. So if your company is not making profits, essentially you're losing your money. So you have to ensure that your company is generating profits year after year. Another important question that you should be asking is, what are the liabilities of your company? As I've already discussed in my previous videos, as a shareholder, you share not only the assets but also the liabilities of the company. as a shareholder or a prospective shareholder, you should see to it that your company is not having a lot of loans or liabilities. And even if it is having, you should see to it that the company is generating enough operating profit so that it's able to pay all its payables in time. Having said that, not having any liabilities is always an advantage. The next question: knowing about majority stakeholders in your company is always a good idea. This is because majority stakeholders have a lot of influence in the decisions that your company is going to be making. Also, their buy and sell activities of their shares in the company can be an indicator as to how good or bad the company is performing. The next question is about the future prospects of your company. Just imagine the fate of the companies that was into manufacturing of radios and photo films. If your company isn't having a futuristic view with their products, they may have to soon exit the market. The next very important question is about the sharing of profits. Good companies share profits to their investors by way of dividends. So it's always a great question to ask if your company has a very good track record of paying dividends. Going to the next question: what goes out of your company is always your concern. Being an intelligent investor, you should always be mindful of the paychecks and salaries the MDs and CEOs of your company is taking. If it's exorbitantly high compared to the standards of the industry, you should rethink about investing in that company. The next question is by far the most important question that you should be asking yourself before you decide to buy your shares. What is the price that you're going to be paying for your shares? You shouldn't be paying anything more than what the company is worth for. If you're getting it at a bargain, it's always better. And that's where value investing starts. Value investing is when you pay less for the company than what it is actually worth. We'll be seeing more about value investing and how to value companies in the videos to come. I hope that you've got a basic idea as to how to approach a company fundamentally. Also, I hope that you're liking my videos, and if you do like my videos, do like it, share it and subscribe it. Thank you.